Good weekend, all. Ira Epstein, and here we are with your weekly edition of your financial market wrap-up. And this wrap-up is for the evening of Sunday, and we're about 6:55 p.m. Central Time on this July 6th, 2025. I want to start out, people in Texas and America everywhere, my heartfelt sympathy. I don't know what else to say for all the loss that people are feeling. It's over 70 Americans dead, and there's quite a few still missing. So that number count's probably going to go up, unfortunately, in Texas, where they had that flash flood that came at middle of the night. I'm sure it was like that movie Twister, when everything's at nighttime and people are sleeping. And I don't know if people got their messages, but the amount of rain was totally insane, and it definitely hurt a lot of the camps, young children, third year, fourth year, third and fourth graders. When I hear that, it's terrible. All right. My heart goes out to everybody. So this is going to be tariff week. You've got to focus on that. That's what this is going to be about. We don't know what's in the 12 letters or 10 letters that are going out, if there's even more, starting tomorrow. That's what the president said. 12 will go out tomorrow. Is it a 10% tariff? Is it a 45, 50% tariff? We don't know. We don't know who the letters are to. We don't know what the responses will be. So you're backing off in the stock market because you like to know things. And that's what I think is going on. The back off is because of that. And once more is known, we'll see. OPEC met, and they've decided to go for the price increase. And two things happened. A price increase from the Saudis, I think, to the Asian customers, and another 100,000 barrels a day coming out of OPEC. Now, OPEC hasn't made these numbers yet. Let me explain that. They've been saying, we can do another 418,000 on top, and that began in April. The problem is not every month have they met that, because Russia and Iraq backed off of production to catch up with what they owed. They were overproducing. Azerbaijan doesn't listen to anybody. They just keep producing. We'll see if they come into the fold or where they go. But sooner rather than later, there's going to be a problem with that. And I predict that's happening. But I would have thought the market would be down on the news, and it is at that point, and that's what you've got. Bonds and notes sort of stable. I think that's the opposite of what you're getting here. Gold is marking time. Down $5 doesn't tell me much. And as you can see, the dollar's down about 18 points. A number of currencies are up against it. No important economic data out tomorrow that we know of at this point. All right, so when we look at a monthly chart of the S&P, and this is only the beginning of the month, you're up 5% already. I mean, that's a heck of a rally that's going on. When we take a look at the weekly chart, now you can see that you're backing off. You're down about 1/3 of a percentage point. But the market here on a weekly close-only chart, this is only of the closes, new all-time high on Friday, staying there. When we look at the weekly bars, you got over the contract highs here, and you're still over them. So this is bullish action. Is this an inverted head and shoulder formation? Where's the shoulder? Right here. Where's the head? Down here. Where's the other shoulder? Right here. So if you pick this up from a shoulder, subtract the difference of the two, it's about 1,500 points. So when you flip it over, you could have a heck of a rally here. As a technician, and that's all that it is, this could call for the 7,000 level. I'm not saying it makes sense. I'm not saying anything. I'm saying it's a chart pattern, and let it go with that. When we take a look at the swing line, higher lows, higher highs, you're up to the 63.30 level, all right? You stayed over the 18-day average, and remember, we did see the golden cross take place in the SPY, and that is working with this market too. When we take a look at where you're at, I'd be a bit cautious, only because you hit the Bollinger Band. It's the first time you've hit it since back here. You haven't hit the Bollinger Band on a weekly chart since all the way back into the zone of September, October, November. And when you hit it, it's certainly a sign of strength. But it's also a point at which a lot of people program their algorithms, and they just go, when you first hit a Bollinger Band, let's take something off the table. Countering that is until this red line closes under 79, I say the pros will use breaks in the market to buy it. So that's what I'm looking at. In the Dow, you have not gotten through this 45,227, the contract high in the E-mini Dow futures. Remember, this builds week on week. And as you can see, you got close to it at 45,177, but 50 points away, and you're backing off a little bit tonight. You do not have the embedded reading here. In the NASDAQ, you do. You haven't hit the upper Bollinger Band. You've made new all-time highs. In other words, contract highs and all-time. And you still have room to run to the upper band, in my opinion. And in the Russell, you're far away from getting to that number. But I'm going to repeat again. I think the Russell's now going to become the favorite of many traders. And the reason is they're going to say they're going to look for the cyclicals to come in, and they don't want to be that heavy in the techs here. They think that they've had a run. Maybe it's time for them to pause a little, money coming out there and finding other areas to go. So I, for one, do not want to be bearish, and I made that statement, I don't know, 8 days ago, 10 days ago. It was certainly back here. And that's where I'm going to stay now. So this joins to me that if I have a choice to buy things, I'm probably not buying the Russell yet. The NASDAQ is still of interest. The Dow 30 are still of interest to me. The S&P, I can go picking in there. The question is it going to become a market of stocks or a market still of the indices? That's something we got to think about. In the DAX, as you can see, the market coming up right now last week, and you can see where you're at. Still got time to go here. In the 30-year bonds, you got up to the 18-week average of closes in red, and you stalled right out. The market's oversold. The trend is up, but it's a bear market rally so far. No more than that. Bear market rallies can happen when the swing line, the line that connects all the bars, each one, you're looking for a pattern in a bear of higher lows, higher highs. And when you break out and you've broken that pattern, markets tend to go back to key moving averages. And the biggest key to me on moving averages is the 18-day average of closes. Some traders use a 20, some a 21. It's not much more than that as the base number. Then you get fancy. I see people using a 50. 100, 150-day average, 200. I mean, how far do you want to go with it? You can probably create an average to do what you want it to do. That doesn't mean it's right. You want an average that the pros and the public follow. You want to be with the herd. I know people always go to me, oh, I don't want to be with them. Ha! That's why they're called a bull market. You want to be with the herd as it's running. The bear falls on you. The bull, you want to be with the herd. In the 10-year notes, you have a lot of sideways action here that the market's got to make decisions on. As we've seen in all this action that's come about, the labor market was strong enough this past week that I think you just took out anything for the month of July. In terms of the Fed making a surprise and making a cut. I think that's whistling Dixie. But what I do think is you've got to look at this, is the market going to build a base that maybe by September this market's ready to rally, and it'll do it before then if it sniffs out that we're seeing weakness now starting to show up. And let me be clear about this in the labor. Historically, it's strong, but it's not what it was after the pandemic. So the numbers have fallen down, and now you have to decide what is weakness. 147,000 jobs isn't 250 like we had, but it's also better than the 115 to 130s that we've recently had. So they're looking for the market to start developing where it's really slipping and not giving you the bounce, and that could be what the Fed wants to get ahead of the game on. Don't know yet, but I don't think you have that condition here. In the dollar index, you're in a bear market. Until it's out of the bear, it isn't out of the bear. On the weekly chart, if the red line closes over 21, it would get me to rethink everything on the chart. Don't see it yet. Still see it bearish. And in the euro, I think you're going to the upper Bollinger Band. Now, Europe's got a problem with the U.S., so how do you treat this going into, are they going to get one of these letters? Are we going to keep 25% tariffs? Because what they said is they won't buy Boeings, or they'll put tariffs on Boeing jets and other things that are going to come about. We'll see. People are going to stand up to the president, and as you know, he's a bully. If they play his game, they will lose. I can't be any clearer. If they play his game, they will lose. And they'll lose because we are the biggest economy in the world. And if you take away what we buy from these countries or take it down seriously, it hurts them. Will it hurt us? It doesn't seem that it matters. All right? We, unlike so many of the other countries, consume what we make. In other words, we don't import as much. That's why we have trade deficits with almost everyone. In the Canadian dollar, the market has got the embedded reading. It still looks bullish to me. It still looks to me like it wants to go higher. Now, you can imagine, I could see this market going on jet fuel if all of a sudden the U.S. and Canada can reach a deal. I'm looking for favorable things to happen between Canada and the U.S. Then you've got a big trading block. We got our two major trade partners in front of us. We can probably do a lot of things with that. So I think the president realizes it. We'll see. I don't know. I don't want to be in Japan's shoes. The president is really focusing on them. And I feel that everything I'm reading, the prime minister would love to do a deal, but he's got key elections coming up on the 20th of July. If he makes the wrong move, how does that look at home? I don't know what they're going to do with it. But that's why it's just going sideways and sort of stuck right here. Bitcoin, I still think the market is trying to base out for another move to the upside. It's not there yet, so don't go rushing in and doing something. The differential between Brent and WTI crude, and on a weekly basis, you can see it just keeps narrowing in, which is fine. Now here's your Brent, and tonight you're down 1.86% on a weekly basis. And the market peaked out at the Bollinger Band, 100-day average. How often do I talk the Bollinger Band? Take my course. And remember, in terms of that, before I go any further, we have our 4th of July sale. 40% off any of my courses on the 1-year basis course. 40% off and that's the research. On my charting course is 40 off. And these courses start when you tell us to start them, but you got to buy them now in order to get this pricing. But the combo package, love it for people that look at ETFs and the futures. But as you can see here, market pulling back, trying to come down a little bit. WTI, same thing. Where's it finding support? Again, that 18-day average of closes, void of a trend, a higher high and a lower low. And in gasoline, I told you I thought for the 4th we'd have great prices, and we did. And now, what's the game going to be? Because that's your driving cycle. You'll have one more in September, as you know, at the end of the summer, as we'll call it, Labor Day, things of that nature. This game's now changes on you again. And I'll be doing reports on that and talking about it with seasonal charts and the like. Again, one of the things, go back to our 4th of July sale if you want, 40% off. You go to iraepstein.com. Under the word, when you get there, research, and that's this, or courses for the courses. I'm Ira. Hope you take advantage. I'll see you tomorrow.